This is our Forex blog for August 25th, 2014. Before I show our currency indexes and show you how easy it is to find which currencies to buy and when to sell, and also for timing purposes, let me just showcase how our signals did today. The euro is pretty dead, so we have one trade that was a loser. This is we bought the narrow range breakout and that failed. Luckily, most of the other currencies that we watch and trade did very well. Here's the pound dollar. And the real key to trading is small losses, bigger wins. Here's the first trade, which is a narrow range breakout of this little rectangle pattern right here. And it also happened to be right at and above the day's high. That led to a huge win in comparison to the risk. You can see it generated 4 times more profit than what the risk was. And then we got it in a trade here that generated about the same as the risk. But 2 wins in this, 1 loss in the euro dollar. We have the euro yen, which did pretty well today and Sunday. Again, a narrow range breakout right here. Small risk, unfortunately, very small win, smaller win than what the risk is. And then we got short right here, and it generated a huge win. Here's the risk on this trade, generated a smaller profit than the risk, but it was a winner, so we're not going to argue with that. And the last one generated about 1.5 times more than the risk. But again, the big win right here is over 30 pips. And then the last main currency that we trade ourselves with automated systems using the same technology is the pound yen. And you can see this first trade is the risk, and it lost a little bit less than that. And then we got into a trade here, and that was a loser too. But guess what? This last win pretty much got most of these losses back. And I'm working on a new exit method that's a little bit smarter, I think, than the first version of our exits. And it maybe is about a month away from being released. I unchecked this, and this is going to show the new stops. When I have this checked, it shows our first original stops, which everybody has now. And you can see this one actually gave it a little bit more wiggle room in the beginning. Here's the original risk, and instead of getting stopped out with a small loss, this one actually made money this time. But for every time that happens, it also occasionally gives back 2 to 4 pips more loss. In this case, we got in this trade here, and I think the last one maybe lost this much, and we lost another 2 or 3 pips here. So what I'm trying to do is balance the benefits of trying to catch extra pips on winning trades, and this new method frequently stays in trades and catches another 10 to 30 pips on big wins where there's no easy, logical, and low risk way of getting back into that trend. So I personally prefer the new stops, and I'm just trying to see it under enough circumstances: trend days, reversal days, choppy up and down days. And it has very few rules, actually. The last one, the original stops, have about 18 to 20 rules. The new one only has really 1 or 2 rules on when to tighten. So I plan on adding a couple more rules over the next month and then release it. Now, getting back to our currency indexes, these let you see what each currency is doing as if it's a chart. And just like the S&P 500, NASDAQ, Dow, DAX, many other indexes that measure stocks, let you see what all the stocks are doing. This does the same thing with the currencies. Now you can see the euro gap down, remained underneath Friday's low all day. Well, guess what? It's probably likely when it breaks out from here to the downside to go down, and because it found some selling here every time it hit the previous day's low, if it breaks out to the upside, it's pretty likely to make a bounce to the upside. The euro is strong, the yen's weak, the pound is strong. So if the euro does break down here, you can sell the euro dollar, and you can sell the euro pound, because the pound's strong for those reasons. So let's go forward, walk it forward. All right, still not able to take out the highs. And it looks like it broke the trend line there, or the bar before. And so even though the dollar's not going up, nor is the pound really going up, if the euro falls faster than the dollar falls or the pound falls, you're still going to make money on the trade. So you can be half right on your currency analysis and still make money, which is why I like it. So starting this off the beginning today, this is probably around 2 o'clock. You can see on the chart here. And we don't use this currency indexes in our signals yet. I do have plans in the next 6 months to a year to put it in, but it's very complicated because the range charts use range bars which have no start and stop time. So it's very hard to see and line up correctly on past bars where the dollar was or where the euro was and so forth. So, but again, you can see if you shorted there, your risk versus reward was very beneficial, as is the second trade about an hour later. You got a little bit of a pullback. If you shorted here, again, the potential profit is bigger than what the risk is. Let's take a look at the euro pound. Again, the pound was strong. Doesn't have to go up. If it shoots up and the euro shoots down, you're going to have big wins. So the breakdown right here, and you can see continue down for hours. So whether you got out of this with a small profit, shorted again here, had another small profit, or just got in and stayed in and drew your fibs on this first wave here and use that to know when to get out. Here's the first 1.27 fib target, which it touched. Kind of was running out of steam there. Let's look at one more example, just the currency indexes. The Australian is strong, the CAD is strong. So let's take a look at selling the Euro Aussie. Oops. Remember, coming up to 2, the Aussie was strong, the Euro was weak, and this didn't really generate that much profit, and later it reversed to the upside as the Euro wasn't that weak, and the Aussie obviously fell in the future, as you can see. You can see the CAD also in the future was falling, but even despite that, when you see one currency that's so obviously weak, the other one looks strong, you're probably going to make some money. Maybe not a fortune, but you're going to make some money selling it. And as you can see here, much bigger potential win versus the risk. And that's all you need to do. If you got short again right here, guess what? You had a very small loss or break even and it went sideways for 2 hours. You need to employ something like a time stop. If it doesn't go your way in anywhere from 10 to 35 minutes, maybe an hour, you might want to get out near break even, lose 2 or 3 pips versus your 6 to 10 pip stop.